Hello, I'm Lelda Smits for the Finance News Network, and joining me from Antares listed property fund is portfolio manager Brett McNeill. Brett, welcome to FNN.
Thank you, Lelda. Great to be here again.
Brett, how has the listed property market performed against the broader share market this year?
The listed property sector in Australia has continued its great run. I mean, if we go back to 2014, the sector delivered a return of 27% for investors, which was well ahead of the broader share market at 6%. And that's really continued on in the calendar year to date. So we've seen the sector up 11% till the end of May, which is a great start to the year. And that compares to the broader share market's return of 9%. So some good outperformance for the sector once again, but also a very good absolute return too.
Great. And how has the fund performed relative to the benchmark over the past 12 months? And which stocks have buoyed your performance?
The Antares listed property fund has delivered a return of 34% over the last 12 months, which is really good in an absolute sense, slightly behind the benchmark, which has delivered a 35% return over the same 12-month period. And I'd say that's really due to our more defensive positioning, where we've taken a conservative stance, especially in recent times as the sector's had a very good run up after delivering such great performance, has caused us to be quite conservative in our stock selection. In terms of the main contributors to the fund, Westfield Corporation has been by far and away our best performing stock, and that's delivered a great return since the company underwent its big restructure halfway through last year, and it's delivered well over 30% return in just the 9 months since then. So that's been a really great contributor for the fund, which has been very pleasing. And some of the other main contributors to the fund's performance have been our holdings in Goodman Group and Sydney Airport.
Now, looking closer at some stocks, Federation Centres and Novium Property Group are set to merge. How was the fund impacted by this transaction?
The Federation Novium merger has created a really big, meaningful property stock. So the stock's now a $12 billion market cap company, and that makes it the third largest Australian property trust listed on the Australian Stock Exchange, behind Scentre Group and Westfield Corporation. So the merger's just completed. We thought overall the deal was okay. We didn't think the benefits were overly compelling from a financial or a strategic point of view, but we think it stacked up okay. So we've just maintained our holding through the merger process. We haven't added to it, and that kind of reflects our view that we're typically against consolidation amongst the large cap Australian REITs. Typically, we don't think there's fantastic benefits for shareholders, and a lot of merger and acquisition activity is probably driven by a bit more of a growth for growth's sake point of view. But we're prepared to hold our view on the Federation Novium merger, given it's such early stages. So we'll see how it performs over the coming year to get a really good feel for the analysis.
Certainly, and Sydney Airport Holdings has reported strong traffic growth this year. What is your exposure to the company and outlook for the stock?
You're right, Sydney has had a really good solid start to the year in terms of its traffic performance. So overall traffic has grown 2.2% at Sydney Airport for the period to the end of April 2015, which is their last reported traffic announcement. And that's pretty much in line with our forecast. Long term, we expect traffic to grow at the airport in the range of about 2.5%. And this flows through really well into the other businesses that Sydney Airport runs. So only about half the revenue at the airport is aeronautical revenue. The other half is more traditional, what we think of as property trust activity. So a retail shopping centre within the airport, car parking and ground transport, as well as a property development and ownership business. So things are tracking really well at the airport, and the stock started the year at a price of $4.71, and it's closed recently more in the range of $5.20. So it's been a really pleasing contributor again to the fund's performance.
Finally, Brett, how did property stocks fare over the last reporting season, and what's your outlook for the sector?
It was another really good profit reporting season for the real estate investment trust, the REITs, in the most recent results season, and really that's the avoidance of any big disasters, as well as just the stocks themselves delivering some really good profit results, where we've seen the earnings backed by good quality numbers, and that's crucial because that forms the basis for the distributions that the REITs pay out that we then pass on to our investors, and that's the key reason we really think the investors are in the sector and in our fund, for the good quality income distributions that we think can grow over time. and everything that the REITs have been saying overall in the reporting periods gives us confidence that these income payments can grow over time. And that's really the continuation, I think, of a pretty strong theme the last few years, where the REITs have delivered good quality results with good income growth expected.
Brett McNeill, thank you for the update from Antares Listed Property Fund.
Thanks very much.